We're ready to start the session, and for that, I request you to kindly have your mobile telephones and all electronic gadgets on silent mode, please. We will start with the first set of parallel technical sessions now. This hall, which is Hall B, is hosting the micro and small enterprise lending track. For the opening session in the track titled Tracking MSE Lending in India, Trends and Insights, I'd like to invite on stage. And these are the people, and let's give them a warm round of applause as I invite them on stage. Mr. Praveen Kedale, Consultant Access, Ms. Radhika Agashe, Executive Director Access, Mr. K.M. Nanaya, Managing Director Equifax Credit Information Services and Country Leader India and MEA Equifax. And then finally, it's my pleasure to invite our keynote speaker, Ms. Ashwini Lal, Additional Development Commissioner, Ministry of MSME, Government of India, onto the stage. So let's give her a warm round of applause, please. Can we have the main exit doors closed, please? The session has been called to order, and we don't want much disturbance in the hall. I now invite Radhika Agashe to kindly welcome the guests, please.
Good morning again. Good afternoon, actually, ladies and gentlemen. Ma'am, please take your seat. On behalf of Access and Equifax, it's my privilege to welcome Ms. Ashwini Lal, Additional Development Commissioner, Ministry of MSME, to the Inclusive Finance India Summit. And also, we would like to profusely thank her for taking the time out to help us with the release of the third edition of the Status of Micro Enterprise Lending Report. Well, since morning, and particularly in the inaugural session, a lot was talked about in terms of the importance of MSMEs and the access of credit for MSMEs. So I, will not go about this again. So I'll go straight to introducing the report. So over the years, of course, everyone is aware that Equifax is one of the leading credit information companies and that has worked with Indian lenders to help maintain high levels of standards of underwriting. Access has partnered with Equifax since 2020 to bring out an annual trend report titled Status of Micro Enterprise Lending. This report tracks the performance metrics of portfolio of business loans up to rupees 25 lakhs, 2.5 million, as a proxy for reporting on loans to the tiny enterprises, broadly in the range of rupees 50 lakhs to 1 crore of turnover, in order to draw out gaps in lending to this segment. And of course, also to use those insights to advocate for necessary attention from financial service providers and policy to address this important subsegment of the micro enterprise. Since you all know that since the reclassification of MSME, micro segment itself has become too big, and therefore I think platforms like these and the stakeholders in the inclusive finance business are repeatedly talking about the nano or tiny set of the micro enterprise sector itself. The report is fully based on the commercial loans and retail business loans data from Equifax India. I'd like to take the opportunity to thank Mr. K.M. Nanaya, Managing Director Equifax and Country Leader India and MEA, for agreeing to this continued partnership and for sharing his perspectives and thoughts also that are covered in the CEO Speaks section of this report. I place on record my appreciation for his team at Equifax for providing the required data on various dimensions covered in the report. At second part of this session, we will have Praveen from representing Access, who will be sharing some key insights of data from the report. I'm happy that the third edition of the report is now being released on the occasion of the IFI Summit in person, because the last 2 years we had to launch it virtually. We look forward to hearing any feedback to make this document more useful and valuable. And without much ado, we would like to hear the other speakers. So thank you very much for joining us for the release. As I said, look forward to this session. Thank you.
Thank you, Radhika, for providing the details of the report. And now I request Mr. K.M. Nanaya, Managing Director, Equifax Credit Information Services and Country Leader, Indian MEA Equifax, for his address, please.
Good afternoon, and I'd like to thank Access Assist for inviting us over, and we were always very delighted to be partnering with Access Assist in bringing these insights. Being a credit bureau, the amount of data that we have is really vast. How can we enable the lending institutions and also the regulators look at the data to make the decision was the initial objective of bringing this report out. And so it's a combined effort between Equifax and Access Assist. We bring in all the data and the insights, and Access Assist has a lot of the domain knowledge that they bring into the report. As you just heard, this is the third edition of the report, and we continue to build on it. It's a very detailed one. I'm not going to take too much time on this. Just to put things in perspective about the MSMEs in the country, this is MS, micro and small, not medium enterprises. So we limited ourselves to the micro and small, which is the most needed segment from a financing and access to capital perspective. So our focus on this report is very much focused on the micro and micro segment. So at the moment, there are approximately about 26 million micro enterprises in the country. As you have heard in the earlier session, I think one of the key things for micro enterprises to access capital is also registration with Udyam Mitra. So if you look at the registration with Udyam Mitra for the micro enterprises only, this is not the entire MSME. So that's about 8 million. So there is a gap of 26 to 8. You see a gap. There are a lot of them have not yet registered with Udyam Mitra, which means it is tough and difficult for them to access capital in the market and get the beneficial, interest rates. And if you look at the distribution of these micro and small enterprises, I think it's fairly well distributed between urban and rural. It's about 50-50, 49 to 50%. And the number of loans, active loans for this particular segment is about 7.8 million. Normally you cannot equate the number of institutions registered with Udyam Mitra to the active loans. The ratio of active loans to the user is normally in the range of about 1.5 to 2. So maybe half of the registered MS micro enterprises have access to capital is our view, but there need to be more analysis on that. Just a very high level data on as to how the landscape looks like. The portfolio on the micro segment has grown about 15% in the last 1 year. So it's kind of a COVID plus, the pre-COVID phase. So 15% growth is a very good growth in terms of a portfolio. PSU is the largest player on the micro enterprise financing. I think they play a very important role, and it's a backbone of our economy, and then PSU plays a very strong role in enabling access. About 60% of the portfolio is with public sector banks. The business loan disbursement growth has been about 15% year on year. So that's a kind of a growth that we are seeing in the recent past. Performance actually over the last 12 months has improved. If you see the performance, the 90+ delinquency, the DPD levels are down by about 168 points, so 168 BPS points. And what is important to note here is, while the report is for up to 25 lakhs loans, the largest concentration of the loan offtake is 0 to 3. And as you read the report, you will see a very interesting phenomenon about the missing middle. The segment of 7 to 8 lakhs of loan category is completely missing. So that's a typical missing middle, that where they're not able to access capital. So the largest portion is in 0 to 3 lakhs. 0 to 3 lakhs category, and the distribution is very equal to what you see as a distribution between semi-urban and urban. Is about 45% of these loans are in semi-urban states. So that's a very high-level view. I'm not going to give out all the insights of the book. I think I would want all of you to read the book, and give us a feedback. So it's a very detailed analysis. We've done a high-level industry overview. You get the POS details, you get the details by the state. By virtue of a credit bureau, our data is organized down to a PIN code level, so we are able to identify opportunities, risks down to a PIN code level in the country from a lending and enabling perspective. So we've brought in great depth in terms of how the report is brought out, and I think every report that we bring out is an improvement over the previous ones, and we really look forward all of you to look at the report and give us your feedback in terms of what would help you to enable access to credit for the micro enterprises in the country. So that's in brief, and just the way we are organized, the data that is pulled out is from these three data cylinders that we have. One is microfinance, retail, and commercial. Between all three cylinders, we have about 2.4 billion trade line information. And this 2.4 billion trade line information, as I said, is organized down to a PIN code level. We are just about in the process of organizing down to a village level. So we are moving away from the macro segmentation to a micro segmentation approach in decisioning and underwriting to ensure that the portfolios perform extremely better than what they're performing at this point in time. With that, I'd like to thank Access Assist for this opportunity to work with you all to bring out this report, and we are very delighted. Thank you very much.
I now request the guests to kindly release of the report on micro-enterprise lending 2022. This is the third edition of the report being brought out jointly by Access and Equifax for tracking the performance of lending to the missing middle enterprise segment. Let's give a warm round of applause. A nice smile for the photographers, please. Thank you. We are now eager to hear from our special guests for the session. I have the privilege in inviting Ms. Ashwini Lal, Additional Development Commissioner, Ministry of MSME, Government of India, to kindly come over to the dais to deliver the keynote address, please. Over to you, ma'am.
A very good afternoon to all the dignitaries on the stage and my dear friends. As you are all aware that micro, small and medium enterprises sector has emerged as a vibrant and dynamic sector of the Indian economy from the last 5 decades. It contributes significantly in the economic and social development of the country by fostering entrepreneurship and generating large employment opportunities next only to agriculture. The MSEs are widening their domain across sectors of the economy, producing diverse range of products and services to meet demands of domestic as well as the global markets. Ministry of MSME envisions a progressive MSME sector by promoting growth and development of the sector, including khadi, village, and coir industries, in cooperation with the concerned ministries, departments, state governments, and other stakeholders through providing support to existing enterprises, adopting cutting-edge technologies, and encouraging creation of new enterprises. In August 2021, MSME Ministry announced a target to boost MSME contribution to the GDP to 50% by 2025. In line with this, the government plans to strengthen the manufacturing base in the country and augment competitiveness of MSMEs. India has approximately 6.3 crore MSMEs. A large chunk of these enterprises still exist in the informal sector. Government's mission is to onboard all MSMEs, irrespective of their size, legal status, onto the MSME ministry's fold through the Udyam registration is an important step to bring all enterprises in the formal economic system, including really tiny micro ones, so that all enterprises can be tracked and supported through the ministry. As of now, more than 1 crore MSMEs have registered on Udyam registration portal. It's a dynamic portal, and every day we are getting large number of registrations. One of the significant impediments faced by small enterprises is access to markets. In general, the government is promoting procurement from MSMEs, and there is a target of procurement of 3% from women enterprises and 4% from SC/STs. However, effort need to be made to bring together demand and supply on the same platform. MSMEs are being encouraged to market their products through the e-commerce opportunities, especially through government e-markets, that is GEM portal, owned and run by the government, where from ministries and PSUs source their procurement through various schematic interventions. To facilitate the enterprises to take benefits of various schemes, the Office of Development Commissioner MSME has launched a web-based application module, namely My MSME. And entrepreneurs can make their applications and track it as well on their mobile itself through the My MSME app. I request all stakeholders in this forum who are working directly with MSMEs to promote Udyam registrations of more and more enterprises so that they can be integrated into the formal ecosystem and be benefited from various schemes of the ministry, and also encourage and support the MSMEs to get on board the government portals like GEM and My MSME. In order to address the challenges faced by micro and small enterprises due to delayed payments by the buyers, the government has made available the facility of MSME Samadhan portal since 2017, which MSEs can approach through micro and small enterprises facilitation councils for support and redressal. Besides this, we have Sampark, Samban, Champions, and many portals and many other interventions for strengthening of this sector. These are only a few examples of support provided by the government to promote the MSME sector. Access to affordable, adequate, and timely credit is undoubtedly a predominant bottleneck faced by micro and small enterprises. The government has been positive in supporting the financing needs of the sector. In the Union Budget of 22-23, MSME sector was allocated an emergency credit line guarantee scheme of rupees 50,000 crore. The government also announced rupees 3 lakh crore collateral-free loans for MSME businesses. In the aftermath of COVID-19 pandemic, Honorable Prime Minister was quick to recognize the role of MSMEs in building the nation. As such, MSMEs formed a very prominent part of the announcements made under the Atmanirbhar Bharat Abhiyan. Under this package, the MSME sector has not only been given substantial allocation, but has also been accorded priority in implementation of the measures to revive the economy. To provide support to MSME sector, various announcements have been made under the package. One such important measure was announcement by Government of India to set up a rupees 10,000 crore fund of funds for MSMEs. This fund, which is called Self-Reliant India Fund, has the objective of supporting venture capital and private equity firms to encourage them to invest in the MSME segment. Many of the stakeholders present in this event, banks, microfinance institutions, NBFCs, and fintechs, are offering various credit products to micro enterprises. Credit information bureaus play an important role in supporting the mandate. Micro sector accounts for more than 99% of total estimated number of MSEs in the countries. In that context, this focused report released today on micro enterprise lending is an important contribution by Access and Equifax for creating data-backed understanding of gaps in supply of credit to this segment. I am sure that this report will help us in formulation of the right policies for the right people. I would like to appreciate this initiative and would also like to congratulate the organizers of this event, Access Development Services, on putting together this summit. I hope the conference is able to provide some recommendations for the government, RBI, and other stakeholders who are all the implementing agencies for improving access to finance for MSMEs, women, and other underserved segments of the society. Thank you so much for giving me an opportunity to speak on this forum. And I request everyone, whosoever in which field, they can contribute towards the development of this sector. Thank you so much.
Thank you very much, ma'am, for your insightful address and for sparing your valuable time for joining this session, releasing the report, and inspiring our audience. I request Ms. Radhika Agashe to kindly present Ms. Ashwini Lal with a memento as a token of our appreciation. And we do know that ma'am has to leave because she's got a flight to catch. So let's give her a warm round of applause as she leaves the stage. And thank you very much, Mr. Praveen and Mr. Nanaya, for joining this session. And I request Mr. Nanaya to kindly remain on stage for the next part of the session, please. And I'd like to invite the speakers and moderator of the panel discussion on stage. And for that, let's give a round of applause as I invite Mr. Amit Mandhania, Senior Director, Retail Initiatives, Northern Arc, Ms. Hardika Shah, Founder and CEO of Kinara Capital, and Mr. K. Paul Thomas, Managing Director and CEO of ISAF Small Finance Bank, to kindly come up to the stage and take their places, please. And before I request Mr. Amit Mandhania to kindly facilitate the panel discussion, I request Mr. Praveen to kindly come up on stage to kindly give the presentation and set the tone. Over to you, sir. So we hand you over to the moderator of the session, and we shall start with the panel discussion. Over to you, sir.
Thank you. Can you hear me? So much has been spoken about lending to MSMEs. Just to sort of emphasize on what we are talking about, it's evidently clear to all of us that flow of credit to MSMEs is important for India to achieve its goal of reaching a 5 trillion economy by 2025. In terms of MSMEs, today 90% of our enterprises in the country are MSMEs. They contribute to around 30% of the GDP. And if you look at the last 1 decade, clearly MSMEs have lifted their role in the economy and contributed, across the spectrum, including increase in terms of the contribution to exports, increase in terms of employment. So they deploy around 110 million workforce today. As we see the supply chain networks redo or adjust to the new realities, there's a lot of opportunity for Indian MSMEs to sort of play a much larger role. What we see in terms of MSME lending, right? So we talk about a lot of opportunity. The portfolio was around 36.4 trillion Indian rupees in June 2022. A lot of untapped opportunity. But the fact is that this sector, the MSMEs are unorganized. They're also heterogeneous, wherein a lot of lenders trying to do a cookie cutter approach to address this segment doesn't really work, which adds to the complexity for lenders to, figure out the right intervention, because it's fairly, there are multiple enterprises, multiple sectors. And what we see is a lot of lenders continue to ask for collateral or offer products which do not meet the requirements of the MSMEs. And if you look at the way the trends are evolving, if you look at the way business is done today, there's a lot of change in the way businesses are operating, adoption of technology in general by the Indian economy or population, or adoption of digital sales by micro enterprises, digital payments by micro enterprises, fairly large. All of this gives us an opportunity to look at how these trends will evolve, how this will contribute to MSME lending, for the country. And we today have eminent panelists coming from different sectors, representation from bureau, from a small finance bank, and from a NBFC. Through the discussion today, we want to explore what are the emerging trends, how is the segment evolving, and how do we see the trends contributing to the access to finance for MSMEs, and also identify what are the opportunities and challenges as we sort of look at growing the MSME sector. With that, I'll request Paul, if we can begin with you, and from your perspective, having looked at MFI and then transitioning to the missing middle, what do you think, has worked? What are your insights at ESAF?
Yeah, as you rightly said, MSMEs are the real fuel for growth for the country. And among MSMEs, I strongly believe that, as Madam also said, 90% or is at the bottom, the nano enterprises, micro enterprises. So for ISAF, we started as an NGO, and it was micro enterprise development program. When we started the microcredit, then we moved to MFI, and that background really helped us to focus on this missing middle segment as a NGO, MFI, NBFC MFI transition to a small finance bank really helped us to conceptually understand and buy that vision for the missing middle. So that is number one, and so that really when we were MFI, we used to refer our clients, our graduating clients to the other banks. So now we are a bank, we don't have any that restriction, so we can meet their needs. So thanks to Reserve Bank for introducing small finance bank category. Vishwanathan sir is here, so we are grateful to sir for creating the bank, and so we are focused on that, and we created different products suitable for micro enterprises. We have a 1.5 to 3 lakh category, and in the report also, 71% of the 26 million is less than 3 lakh, and the average ticket size is also 54,000. So we are even the microfinance also cater to this segment, because our ticket size is 40,000. So recently, last year, we did a study. 25% of our micro entrepreneurs or our micro borrowers, I would say, they create 3 to 5 jobs. So you can imagine the contribution the micro entrepreneurs are making to the GDP. So they are very, very important. So that's why we created 3 products specifically to address the micro enterprise category, the 1 to 3 lakh, and 3 to 5 lakh, and above 5 lakh. So as Nanaya in his introductory speech said, the 7 to 10 lakh category is a crack. Actually, we need to crack that category. There are issues. Recently, my team went to see BRAC Bank, Bangladesh. So they have an excellent program. 45% of their assets are in the MSME. That too in the sub 7 lakh that category. So it is a high touch model. So that's what. So we need to, whatever we were doing in early 2000 for building up the microfinance sector, we need that focus and that high touch model to build the micro enterprise financing. That's my, and also we need to have a hand holding of these micro enterprises is also required, not just lending. We need to help them to build their balance sheet, build their accounts. So we have tied up with a few fintechs who can help micro enterprises, who can prepare their accounts, and both digital and manual cash collections, all, and prepare a balance sheet. So that type of, and also to prepare a project report. So this type of hand holding is required. Connecting these micro enterprises with the markets is very important. Connecting them with building them to the digital platforms, so marketplace. These are all. I think that if that holistic mindset is there, is required to build a micro enterprise financing. That's my uh, initial thoughts.
Thank you. Yeah, clearly, I think the report talks about MSME up to, ticket size of up to 25 lakh. And I think what Paul is saying is for MFIs to graduate to up to 7 lakh ticket size is easier. Beyond that, of course, the intervention has to be a bit different. And I believe Kinara Hardika is here, and they have been, looking at this segment. They offer ticket sizes upwards of 25 lakhs also today. And over the last 10 years, Hardika, if you could share what has been the insight, because you started looking at the segment very differently, and how has this evolved for you? How is the customer segment evolving, and how do you see this?
Thank you so much for having me on this panel. And I really like what you were saying, Mr. Nanaya, about the 7 to 8 lakh being the new missing middle. We are serving exactly that missing middle, and we started with a unsecured business lending focus. We have been doing unsecured business lending for MSMEs for the last 10 plus years. And that has given us an understanding, a very high touch understanding, because we have a branch network that is fully digitally backed to basically be able to do fast disbursements, but with quality and good underwriting. So what I see in trends, I would say there are 3 things. One is over the last decade, this customer's understanding of credit bureau, their score has significantly shifted. I remember having these conversations early on where we would try to educate the customer what that is. Now the customer educates us. They come and tell us, look, my report says this, where is this coming from, right? So that is one big shift that has happened, and that is required for us to build good credit culture in this segment, because the more they understand, the more they adopt and adapt to it, the better they will be in understanding what it takes for them to get access to credit. The second thing that has changed significantly for both the customer and for us is the access to the India stack and the digital infrastructure. This has been a massive shift in how we can serve this customer better, right? Verification, validation, whether it is KYC, whether it is GST, whether it is banking, and now with account aggregator, which is perhaps the next frontier of that, the ability for a lender like Kinara to underwrite that customer. We have moved from what was a traditional model, risk-weighted average scores from sales and risk teams, to a fully digital, fully automated, data science-driven underwriting models that essentially do not allow for any human override. And we can truly do that because we have access to better data, more verifiable data, and more consistent information. And so that to me is a big shift in the last 10 years. And then the third thing is how the customers are engaging. I think maybe COVID accelerated it, although I do think that the customers were on this journey anyways. There's a question of leapfrogging. We have seen it when we talked about the phone, right? We went from feature phone straight to a smartphone for this customer segment. We leapfrogged a lot without having the need for a computer. We see that leapfrogging now in how they conduct business, right? WhatsApp is really the new business tool that is used by most MSMEs far more than Tally or anything else that they see as a side note, right? So how they're engaging digitally, how they're coming online, what their requirements are. A lot of the questions we get asked in terms of support is, can you help me create a Google My Page or a Google business account? Those are the questions we are getting now. Very, very different to what was happening all of 5 or 7 years ago. And I do think these three trends, understanding their own credit, their own journey, understanding and working on this digital infrastructure that is being built out. And we heard from Ms. Ashwini Lal about threads and gems and all these portals and access, and getting that access and bridging that will really help, and doing that digitally, which they are on the journey, but maybe acceleration and support, as you were saying, Paul. How do we help them beyond just giving credit, help them get onto those platforms or help them get through those digital journeys to the next stage will be significantly valuable and a big shift in the trend and that we see in this market.
Thanks, Adhika. We spoke about a phygital model is what you're talking about, and access to more data, ability to underwrite better. Nane, I think we have observed a lot of new models coming up. So we see a real focused in supply chain finance, thanks to the digital adoption. We also see a lot of new business models, be it revenue-based financing, or using data to finance through various partnerships. How do you see this evolving, and does your data sort of speak separately for this? And in terms of growing the MSME lending in the sector, what's your perspective?
Thank you. I think it's great to hear about the recognition of credit bureaus, the role that we play. We continue to play this enabling role in enabling access to credit in the country. I think the foresight of RBI is extremely appreciable to set up credit bureaus to ensure that the credit history is managed at a central location and it is enabled to all the lenders to access the credit history before they're making a decision. My comments are in, 2 or 3 parts, right? Part 1 is the credit bureau data as to how can one leverage the credit bureau data to make better decisions, So we have data from the microfinance, retail to the commercial lending. We have the capacity to bring all this data together to provide a comprehensive view of the borrower. Whether they borrowed in microfinance, they borrowed in retail, whether they're borrowing in commercial, we're able to bring all of this together through a product called Comprehensive Credit View, or a 360-degree view of the credit borrower. Gives the lender a comprehensive view of the indebtedness or a lack of indebtedness or a discipline in the way the loan is taken and the repayment is made. So we're able to bring that together in a very comprehensive report, which is helping the lenders effectively well to make the right assessments on this. That's based on the bureau data that we do to provide at the point of lending. But at the point of making decisions on either strategy or on the pricing or on the product launches, we provide insights at a great granular level for all the lending institutions to make those right decisions of which market to enter, which market to exit, which market to strengthen, which product to launch, which product to sunset. So we help them make those decisions based on the data that is available in the bureau, which is extremely strong. And this is the data submitted by all the lending institutions. It's data from the source, so it's extremely powerful in the strategic and tactical decisioning by all the lending institutions. That's an enabling role that we play. The second part of the role is Credit Bureau Data Plus. So when I say Credit Bureau Data Plus is all the incremental data that we are able to get, whether it is through account aggregator. So you're able to get both the data, liability on the asset side, technically look at the, balance sheet or a P&L of that enterprise before you make a decision. Or, you're able to access GST data. So if you have to enable cash flow based financing, which is, I think, extremely critical for all the micro enterprises to be able to get the finance to, stock the requirements, right? Or the requirements that are required to run the business. I think the cash flow based financing is very, very important, where you can bring the credit bureau data and the GST data together to enable those decisions on a very real time basis, because the platforms are available, technology is available, and we have built complex models to be able to arrive at the score before you make the decisioning for lending based on multiple data assets. That's the second part of it. The third part to me is financial literacy, right? Look at all the data sources, number of micro enterprises in the country, and number of micro enterprises who are registered with the Udyam Mitra, number of micro enterprises who are accessing capital in the formal credit ecosystem, right? They're all accessing capital, but it could be accessing capital in the informal credit system at a very high cost and a lot of possibly documentation or no documentation. But I think accessing capital through formal system, which has improved phenomenally over the years, I think is an area that needs to be addressed by the industry, by all of us, so that they know that they can access credit in these forms much simpler way, much quicker, much faster, much easier, and at a lower cost. I think these are three broad comments that I have. I think supply chain financing is an evolving area at this point in time. I think it just enables commerce in a great way, and data is a fuel, and we bring in that data as desired by the lending institutions to make the supply chain financing seamless. I think it is, in my view, it's at a very early stage at this point in time. Some of the newer platforms that are coming into play, I think, will play a very important role in enabling supply chain financing. And we all have a role to play in enabling that growth.
Thank you. Thank you, Nanaya. I think as we move ahead in the session, we'll explore how partnership and how different institutions, be it bureau, NBFCs or SFBs, can work together. Before that, I'll request Praveen to come and make the presentation.
Thanks, Amit. So this report basically is based on data provided by Equifax, which was submitted to Equifax by different financial institutions. Three categories of loans we have discussed in this report: business loans, business loan agri, and mudra loans. Data source I talked about, it is from Equifax. It is basically representative data for MSE sector. It doesn't represent the universe. It is the loans which for which information is given to Equifax. And what we can look from the data is trend. What is happening in the sector? The absolute numbers are not don't represent the universe in India, but the trend is interesting, which can help policymakers and lenders to update and provide more services, insights, etc. So in this, I talked about portfolio outstanding, repayment, that is delinquency 90 plus DPD, and sourcing, what is sanction data. And we talked about 4 parameters, that is ticket size, states, different states, how they are working, lenders, banks, private banks, public sector banks, NBFCs, and the rural-urban divide, rural-urban data, which is available as provided through PIN code data, which is available with Equifax. And the data we have analyzed here in the report is for 3 years, that is July 19 to June 20, and similarly for next 2 years. I'm not, the whole report definitely you are going to read, and that would provide you more insight about the data. Few of the snippets that sample are presented in this here. So this is basically trend of different ticket sizes, loans, portfolio outstanding from rupees up to 3 lakh, 3 to 5 lakhs, and up to 22 to 25 lakhs for June 20 data, June 21, and June 22 data. As you can see, the portfolio increased for up to 3 lakh rupees. Portfolio in June 21 increased significantly and then reduced from June 21 to June 22. Basically, the different policies that government given at the time of COVID for a repayment moratorium. So repayments were halted and interest at the time increased. That caused the increase in portfolio. And as gradually repayments came, even after disbursement, portfolio decreased. That is one trend which we can see up to 5 to 7 lakhs, but in later stage 7 to 10 lakhs and above, that thing is not there. Kind of trend that the loans of higher ticket sizes were repaid even during the COVID times. One more interesting thing, the missing middle gap. The trend that is up to 3 lakh rupees, the amount is up to 35,000 crores. The trend line, that is dotted line, that shows a gap between of in ticket sizes 3 to 5 lakh and 5 to 7 lakhs. I can again discuss this in sourcing table. The business loan percentage share of different lenders according to different locations, definitely largest sector, largest part is taken up by semi-urban enterprises, and PSU banks makes up the largest share in the lending. Business loans, the state wise, it is delinquency data. So there are two data in here. One is as portfolio as percent, 90 plus DPD portfolio as percentage of total portfolio in the state, and second is percentage contribution to total POS of 90 plus DPD in the overall country level data. So Tamil Nadu leads. It contributes near 14% to total POS, as the portfolio also very high in the state. And the 90 plus DPD for the state is around 12%. Some of the states which stands out, Meghalaya, Arunachal Pradesh, near more than 17%. Similarly, Tripura, Assam. The trend, what I am saying is, you can observe different trends which can help you or policymakers, lenders to create better policies and services for the sector. The missing middle again, here we can see the blue bar shows the sanctioned amount, and the yellow lines, the trend, that is orange line, that shows the trend should be like, should follow the orange line. Okay. The yellow lines which shows there is gap in 5 to 7 lakh ticket size and 3 to 5 lakh ticket size. It is not that MSMEs are not getting funded. They might be getting personal loans or from informal sources, but those loans are not classified as business loans, and that is one gap that probably need to be addressed by policymakers and lenders. Similar different sanctions and different sanction amount in different states and average loan sizes. As interesting points here is Tamil Nadu leads with and the higher loan sizes are can be observed in Daman and Diu, New Delhi, and Rajasthan. Uttar Pradesh has one of the lowest average loan sizes. These can be observed. Yeah. The second category, that is business loan agri. The lender's contribution to total POS, definitely PSU banks leads it. 79% share in business loan agri are given by PSU banks. The rest of industries, basically NBFCs and other categories, the share is very low. NBFCs have the lowest share, only 0.37%. And the cause can be seen in next slides, we'll discuss there. And growth in portfolio outstanding in business loan agri from June 20 to June 21 is shown by blue bar, and from June 21 to June 22 by orange graph. We can see due to COVID, the repayments were halted and portfolio change is very high during that period, but it reduced significantly after that. Business loan agri, the same trend as in business loans, business loan agri. Tamil Nadu has the highest 20% share in both number of accounts and total amount. This is interesting. Why one state have more than 20% share? So that these need to be understood. Business loan agri repayment trend, what is 90 plus DPD percentage according to lending institutions. NBFC, we can see why that have only 0.37%. That is because highest delinquency with their portfolio. Business loan agri, rural and urban almost have similar percentage share in sanctioning. Urban have only 13%. Average loan sizes in rural, semi-urban, urban are standards almost similar. Then comes the third category, that is mudra loans. That is Y1 is July 20 to June 21, and similarly for 3 years. We can see the PSU banks contributed the largest, and the second more than like 95% PSU banks have share in mudra loans. Again, the different ticket sizes, 0 to 3 lakhs makes the largest share in these 3 years. 7 to 10 lakhs have increased in June 22 significantly. So next, 90 plus DPD delinquency status. This is very concerning. Like in percentage contribution of rural and POS is 13%, and to total, that is 13% 90 plus DPD portfolio, and total is 31%. Similarly, semi-urban have 14% of their portfolio in 90 plus DPD bucket, and as their share is higher, they contribute 57% to total 90 plus DPD portfolio. Next is states share. Here Andhra Pradesh stands out with more than 18% share in total number of accounts, and around 5% share in portfolio outstanding in mudra loans. That's why the average loan size is very small, less than 50,000 in Andhra Pradesh. These are trends which need to be understood, why it is happening, what are the root causes, and how to tackle the challenge that the distribution should be even across the country, across different loan categories, across different MSME sizes. So these trends can help different institutions, agencies in reaching those decisions. Thank you.
Thanks, Praveen. So quite insightful, I think, thanks to partnership between Axis and Equifax. On that note, Nanaya, we spoke about the kind of data that bureaus have. What is the scope of and the opportunity for you to partner with NBFCs and banks, and in general, tech fin companies partnerships with lenders today, and how do you see this evolving for MSME lending?
So I think we have an existing partnership with all the banks and lending institutions on various different verticals within their organization. MSME and micro enterprise, as I said, is a segment which is drawing a lot of attention, and that's where the high growth opportunity is, and that's where the data is also kind of evolving at this point in time. I think there's more to be done from a data perspective. That's a work in progress. And if you've seen the little bit of the insight that was presented now, uh, I don't know whether it is early to draw correlations between where the microfinance penetration is good. That's where the MSME loan offtake is also higher. So it's possible that there are a lot of microfinance borrowers are graduating to take business loans, whether it's business loans or agri. So there is a lot of work that is going on. So we have built scores called graduation scores, which where lenders can identify from their existing base as to who will qualify to take the next loan. So instead of talking to all the customers that they have, they can talk to a select customers to identify who qualifies for a next best loan. So a lot of innovation is happening in the segment to help lenders identify customers. But I think a lot more work, as I said, needs to be also done to create the awareness with the micro enterprises saying that they can access capital through this system. So that's where I think our partnership continues to build. We are enabling digital platforms. Again, various different models are being built on digital platforms to make decisions which will take in bureau data as well as the application data to give out an application score based on what decisions are being made. So we are enabling digital platforms. We have launched a digital decisioning platform called Interconnect, wherein you could connect it to multiple data sets. You could host your models. You could host your rules by segment and get the decision back into LOS. So our role is largely in bringing data, bringing insights, building models, and building the technology platform. So that's the partnership that we bring in. As and when the more external data sources are available, which is non-bureau data, the lenders can utilize the data. We have a limitation in terms of how much of data that we can bring in. By law, we should only be managing the data submitted by the banks. We cannot access any other data, but the lenders can use platforms to bring these data together. And we have data scientists who can help them bring data together to make sense out of the data to decisioning. So many areas of partnership, but I think innovation is key to success.
Thank you. You see ESAF very active in partnership lending. You work with a lot of NBFCs, tech, platforms, originators. What's a bank's perspective of, how does it help you reach the MSMEs? And, how do you see MSMEs accessing finance through this mode?
Yeah, from the launch of the bank, we believed in partnerships, and we all our microfinance loans are being sourced and managed by business correspondents. Today, we have 20 business correspondents across the country. So they all started with microfinance lending, NBFCs, and mostly NBFCs and MFIs. So 9 of the 20 BC partners we have helped them to start micro enterprise lending. So they set up separate verticals within the bases, and the bank is training them and helping them with technology. So we believe in partnerships because MFIs, so they have a limit to support. So from most of the customers of the microfinance MFIs, they wanted to graduate to the next level. So so that's a good sourcing point. We also partner with the farmer producer companies. So around ISA Foundation itself promoted 200 plus farmer producer companies for the agri business loan. So we use the FPOs as a sourcing partner for them. We also work with credit bureaus with Equifax to build our credit engine and use the data. So we believe in, and only partnerships, definitely partnerships can build a scale for micro enterprise lending in this country. That's what we believe.
Thank you. Yeah, I mean, clearly at Northern Arc, we believe that partnership is one way we can, expand the overall reach in the market, be it in terms of partnerships for the ecosystem or for lending. We work with a lot of NBFCs today, partnering with them on multiple fronts. Hardika, your perspective of what are the challenges that you see for a partnership lending model to evolve? Your perspective of how it is important for you to access, or the MSMEs to access finance, and how do you see this evolving?
Yeah, I mean, the point that Paul was making, right? None of us can do it alone. It is just too large of a problem statement for us to be able to solve one at a time. So the partnership model is the right approach, and I think RBI recognizes that. Hence, we have clarity on co-lending guidelines. Hence, we have clarity on so many of these, questions, whether there's digital lending guidelines and so on, right? The one thing that, from our experience, and we've been partnering with Northern Arc for way before all the guidelines were there and continue to, one of the things that we've learned through the process, the technology is critical. You've got to figure out a way to integrate across the process, not just at origination, but also at collections, also at reporting and so on. And that really creates a layer of transparency and clarity between the partners as to what is really going on for the shared risk that both the partners have taken. So that's a key. The second element that I do believe is a key is valuing and appreciating what the originators are doing. So if you are trying to then overlay a whole lot of new rules, then you're better off in a more BC model. So how do we disaggregate a BC model from a co-lending model? What is better suited for BC versus co-lending is important, both for the originators and the partners, so that we don't end up in a muddle in the middle, where if you are a co-lending relationship, then you've got to trust that the originators, people, process, technology works, and build confidence that it works. Otherwise, let's just do the BC model, right? And in finding that balance is important. I think the third thing, which I believe is going to be perhaps more of a future trend, is this conversation a lot of people are having around embedded finance. And we are seeing that, and we are, from a partnership point of view, it's a different kind of partnership. How do we embed ourselves where our customers are and give credit on demand at the point that they need in a product that they want in a tenure or structure that is most amenable to them? That's really the next evolution that we all need to collectively do, regardless of what the back end is or what the technology challenges might be. So I'll leave you with that.
Thank you. Thanks. I think it was an interesting discussion. We explored what are the different opportunities, the trends. If I can summarize clearly, the sector and the opportunity is fairly large. It doesn't only need lending; it also needs an ecosystem play, wherein if we can facilitate the MSMEs graduate and educate them in terms of what is the importance of data that they are putting forward, what is the importance of, and maybe connect them with networks, be it sales or sourcing. There's a lot of intervention today across the country, both public and private, which if MSMEs can explore, which will help eventually the lenders to get access to those customers and for them to grow. The other thing I think, if I can what we gathered is data, of course, is important, be it in terms of the availability of credit bureau data, but there's a lot of other data. The importance of analytics with this data is, for lenders to figure out what is the next product that you can offer, how can they improve the access, because access is not only about providing some money, it's also about what kind of product, what kind of structure. Clearly, partnership is the way to go. Collaboration between tech fin companies, bureaus, NBFCs, and originate banks is important. As Hardika said, right? So the opportunity is fairly large. None of us can do it alone. We have to figure out a way of contributing and working together, be it in terms of working on analytics piece, or working with capital providers, working with originators who have a larger reach. The overall goal should be to achieve the economic growth fueled by MSMEs, where there is a lot of opportunity, and I'm sure all of us can do this if we work together towards this. On that note, thank you all. Thanks Hardika, Paul, Nanaya for a insightful discussion. Thank you.
Thank you so much indeed, Mr. Amit Mandania, for felicitating the panel discussion. We'll now break for lunch. We look forward to having you back in this hall by 2:30 p.m. for the next session on MSE lending track. Ladies and gentlemen, lunch is being served in the swimming pool lawns. So kindly do come back by 2:30. It is 2:05 now, so we need to be back here in 25 minutes. Please keep your personal belongings with you. We're not responsible for any loss in the hall. Thank you.